All right. Here we are again. Every morning we come in here and watch these silly markets and see if we can't make a little money. Okay, what we're looking at here this morning, S&P 500 up in the upper left-hand corner, Dow in the upper right-hand corner, Russell in the lower left-hand corner, and the NASDAQ in the lower right-hand corner. The nice thing about trading futures, it's also one of the bad things about trading futures, but one of the nice things about trading futures is that you don't have to worry about all these crazy scanners and trying to find something to trade. We know every day what we're going to trade. We're going to trade these four markets. Okay, we've got four choices. We're going to trade these four markets every day. It's the same thing over and over and over again, which is what makes it easier and also harder. I mean, you have these four markets, and if they're not active that day, you have a slow day. You can't go off and find something else to trade. Well, you can. We can go look at other things. We've got other markets that we can trade. We don't have to stick with the indexes. It's just that the indexes, in my opinion, are the best things to trade. That's why we trade the four indexes. We love the indexes. All right. We can also go off and trade other things. We got stuff in here. We got crude oil. Let's pull up a crude oil chart. Here's crude oil. We want to go trade crude oil. That's kind of fun, right? Hey, go trade crude oil. Let's watch crude oil today. This is the full size crude oil. We have mini crude oil too. Seeing down here in the bottom window, this is mini crude oil. Let's draw some dollar calculators on here. From this peak here to this low, that was $330. From this peak here to this low, that's $137. So you see it's about half the size to trade the mini. How much does that cost to trade? How much money do we have to put up? Come into the key. For the day margin, it's $1,800. So you only have to have $1,800 in your account to trade one contract of crude oil. That's pretty cool, right? So if you open your account with $5,000, you can trade crude oil, no problem. And that is of course, that's the micro mini, or not the micro mini, just the mini. Let's go look at the full size. If you want to trade the full size to get the 330 on that move, you have to have $3,630 in your account to trade one contract. Now remember, we're in the futures market, so we don't trade shares. Shares are something that you trade over in the stock market. In the futures market, we trade contracts. And contracts are a group of something, right? Make up one contract. The reason we use one contract because one contract in crude oil can represent, in this case, contract size 1,000 barrels of crude. Okay, so it's 1,000 55-gallon drums. You're familiar with 55-gallon drums, 55-gallon drums, or 55 barrels of crude oil. 55 barrels, 1,000 of those makes up one contract in the regular size market. If we come over and we are trading in the mini, then you can see it drops in half. It's 500 barrels. Okay, so 500 barrels makes up one contract in the mini. That's how they do it. That's how we do it here in the futures market. Okay, we do it differently in the futures market. So one contract of corn, for example, if we went over and we wanted to trade corn, one contract of corn would be one train car. Okay, on the regular size account, one train car of corn is one contract. Okay, and then you have minis, which would be half a train car of corn, etc., etc. So that's how you have one contract, and the contract size is specified. What have we got? When's the bell going to ring? 29. We got 1 minute till the bell rings. 1 minute and 40 seconds. So that's your little lesson on contracts and on the futures market. We're trading here in the futures market. We can trade all kinds of things. But what we like to trade, let's come down. Here's the let's go there. Let's go look at the grains real quick. This is corn, soybeans, soybean oil, and wheat. So we got this set up to watch the grains. So if you want to trade corn, wheat, soybeans, they don't move as fast. They move a little bit slower. You probably want to position trade on this. Take a longer position, a longer time to trade. But let's come over, and while the market's getting ready to move here, let's come into the 1 minute charts and watch the market. The reason I like the indexes, because they have the opening bell that opens with New York. Right now, we're in the futures market. These things trade 23 hours a day. They're trading all the time. So this is really nice in that regard, in that you can trade this anytime you want. But we do have the open. The open in New York is going to affect the open of the indexes here in the futures market, even though they've been trading 23 hours a day. You're still going to have that crazy fluctuation on the open. So the market's taken off here in the morning on the Dow. I want to actually go look at a couple of things as well. The morning, the bell's going to, well, the bell just rang. There it is. Let's watch it for a second. And then we'll go look at some other things. Now, oftentimes I don't trade the bell because the bell, the market goes crazy. And that can be good if you're on the right side of it, but it can also rip your wheels off real quick if you're on the wrong side. All right. You just have to be mindful of the fact that, it goes both directions. You look at it in hindsight, and you're like, oh, land, oh, we should have been, we would have been rich, rich, rich beyond our wildest dreams. Look, we could have paid, we could have got in right here, right? Pre-market session, that was at 7:20. So that was 10 minutes ago. That was a nice signal for entry, and that market would have just taken right off. And you can say, well, that would have been great trade. Right now, we'd be up $580. We'd be done for the day. You could have done that. Yeah. I'm not here to tell you how to trade. I'm here to show you how I trade. And I trade very conservatively. And if you want to trade very conservatively, just watch how I do it, and you can trade very conservatively too. Or you can be as aggressive and as crazy as you want. You can jump in on these opening bells and market bells and trade those. And, maybe, we get down the road a little bit and we're, feeling crazy. Maybe we'll do that on the opening bell to watch some of these markets. But look how this one came back and flashed back on the open. It didn't go quite as cleanly. And that's the problem, is that some of these bars on the open, they look nice in hindsight. But when you put them in there, look at this bar right here. This was a nasty bar. That bar came back, and if you were in the market, it came back and knocked everybody's stops out only to take off and rally. Same thing right here on the S&P. This market, everything, the market came back, pulled back really hard, and then took off and rallied, knocked everybody's stops out who might have got in on that little red bar right there. This one didn't quite do that. I mean, it did. It came back and broke right here, broke the low on that trend, but not quite as bad. And then here it did too. It came back and broke the low and then took off to the long side. So it knocked everybody's stops out that went long and then took off and went long. So sometimes it can be a little deceiving what you're looking at. You got to look at the both sides of the market, not just say, "Oh, look, it's going up. We should have been long." Make $1 million right off the very first bell. You go try that. Try that. I, you know, I've tried it a million times. It doesn't generally work out good for me. So I like to sit and just watch it, wait for things to calm down, give us a directional trend. I like to bracket the highs, bracket the lows the first, 5 or 10, 15 minutes sometimes, see where the market's channel is, wait for the channel to appear, and then see how the market's going to play off of that channel. Are we going to have a bullish day off that opening channel, or are we going to have a bearish day? Because the market very rarely just takes off and goes to the moon. What it does, it goes up, comes down, sweeps out all the stops to the low side. So it sweeps out all the stops to the upside, sweeps out all the stops to the low side. And then it starts to decide whether it wants to be bullish or bearish for the day. That's pretty common. Okay, look at the Russell. The Russell's doing that right now. So it ran up and now boom, it's dropping like a rock. You're like, well, we would have just reversed our position and gone short. Okay. I'm not telling you how to trade. I'm just showing you how I do it. You go do that. You go do that. No, I'm not a fan. Okay, so we sweep real high. Now we're going to come back down, knock everybody out that went short, that has their trailing stops in there, and we'll get some sort of an assemblance to the market, and we'll get an opportunity to get in. There's no rush. We've got what, 7:30 until, and it's 7:30 my time. It's 9:30 if you're in New York City, but it's 7:30 my time. So if you wanted to trade like this and still have a 9 to 5 job, you just trade from 7:30 to 9 here in my time. Come and move out here in the mountain time, or even out on the a little bit further, but you don't need to go all the way out to California. Then you have to get up at 6:30 in the morning, which is a little tougher. So you get up at 7:30 in the morning. That's perfect. You come in, you trade for an hour, see if you can't make a little bit of money, and go to your 9 to 5 job. Makes it a little easier when you have a 9 to 5 job anyway. Let me turn on a little bit of information here for you. Come into the banners. Who is Land Turner? Why would you want to come and follow this guy? Well, I used to be a former instructor of the Chicago Mercantile Exchange, the Board of Trade Education Centers. And I'm currently an instructor instructor of finance at Utah Tech University. It's summertime right now, so I'm off. I don't have to go teach classes. So I'm just trading through the summer. Summers are oftentimes the time that we get a little bit lazy in the markets too, but they've been picking up, been doing a little bit better, not been quite so lazy. Let's go look. Here's what I want to do. I want to look at a longer term chart. Let's go look at the dailies. I always like to look at the daily charts. So we're still, you can still see, from yesterday's market. We went and looked at the yesterday's market, and it was pretty slow yesterday. If you can see in here, this market yesterday, it didn't do much. It's been pretty quiet. It moved a little bit. We made a little bit of progress yesterday, but not too much. Here in the morning bell session with you guys, we took a couple of trades yesterday, if you remember, and all we did was break even. I went back later, made a little bit, but didn't do a whole lot. But the market's not been, it's coming into an indecision mode. This is the 2 minute chart. Oh no, this is the daily chart. This is the daily chart, and you can see I'm looking at the bulls and bears. The bulls and bears what's turning the price bars red, yellow, and green. These are not the traditional colors. This is actually a Fibonacci Elliott wave setup, and it's telling us what the market is neutral, or whether it's bearish or bullish. Okay, and right now the market's neutral. It's neutral on these two markets. The S&P is calculated to be neutral. That's why they're yellow. The Dow is neutral and looks like it wants to break a little bit higher today, right? We got a nice little trend line here to the upside. So maybe we'll get a little bit of a rally up and then test these blue lights up in here. But we've also got the downtrend. So we're coming into a pennant formation or a triangle wedge pattern on the daily chart. So the market's kind of very indecisive right now. It doesn't know what's going to go on. We got lots of things going on in politics. We've got the negotiations over what they're going to do about shutting the government down again, right? They're always fighting about the budget and who's going to get their way. So we got that kind of indecision going on. So that's a little bit of what we're looking at on the daily chart. So on the daily chart, everything is just kind of neutral, flat, trying to make a decision. So then we come in and we say, well, what could cause the market to break out of this triangle or this wedge formation? And would it go bullish or bearish? Which direction is it going to go? If we do our counts and measures, from the Elliott wave, this would be the peak up here. So this would be an X, 1, 2, and then we'd be looking for this market to break out the bottom of this triangle wedge formation. If it doesn't, if it breaks out to the upside, I would look for it to break out, test this previous high, and if it can't pass that previous high, this is coming into a pattern. Look at this. This pattern right here on the daily chart on the Dow is classic. Let me come in here and show you something. I got something for you right here. Let's turn this thing here off, and I'm going to show you. And let's turn this thing that we're working off of, and what are the probabilities of an X1SA1. And so if you've ever played blackjack, you get those little blackjack cards and you can sit at the blackjack table and you can look and see what they have. Well, there's probabilities for these different setups in the Elliott wave Fibonacci sequence. And so we can have, and I've got that for you, and you just have to go pick it up. Let me add that on here too. If you go over to Amazon and get my book, it's called Stock Market Playbook of Strategies by Lan Turner. Inside that book, it teaches you all about these Elliott waves and these Fibonacci sequences, and it has a table in there. It's actually not a little card, it's several pages, but it shows you the probabilities of all of these setups. It says, okay, an X1SA1 is a low probability of success. Okay, to the long side, it's going to be more likely that it's going to drop out the downside. The next one would be the second one down. That would be an X2S, right? If you're short the second drop, that would be your second exit to the downside, and then it would be a new A1. So an X2S A1 would be a higher probability of success than an X1S A1. And that's all laid out in the playbook of strategy. So we know we don't know, because the markets can do anything, they can break all the rules. But we have lots and lots and lots of history that tells us what these markets have done in the past, and that's all been taken into consideration in that book, and we can come in and look at the probabilities and we can learn how to read charts. It's called technical analysis. So if you want to be a trader, you want to learn technical analysis, just to give you an example, I used this strategy last year in my stock account. The S&P 500 made, what was it? Not quite 5%. And so using this strategy in my long-term position trading account in the stock market last year, same strategy, and we do the exact same thing on a 1-minute chart as we do on a daily chart. We can do the same thing, but in my long term, the S&P made 5% last year and I made almost 30%. Okay, and it's just because I know how to read the charts, and I've learned and practiced and done this for years, and I've documented everything that I do and how I do that, and I've put it in that book, and it's on Amazon. You can go pick it up for what, $30 or something. So you can have, a lifetime of my knowledge in a $30 book. And it's not just another book of patterns. It's 280 pages long of all kinds of great trading strategies, setups, patterns, all kinds of stuff. Look at the Dow is still almost basically at the open. The Russell is starting to drop out the bottom. So let's go back down to a shorter term time frame chart. Let's come back down here to the 1-minute chart. We'll see if we get an opportunity to so the opening bell was right here, and look, the Dow is right back to the opening bell. So it rallied up, come down. We've got a couple of areas of support and resistance in here we can drop in here. So I'm going to drop in a line here, drop in a line here. And this is our kind of our channel at this point, all right? The high and the low. Of course, the channel for the open was right here. So it's right at the open, but we had this little area of support down here, and we have this area of resistance up here. Now, oftentimes you hear me always say an area of support and an area of resistance, and then I draw a line. That's just because I'm lazy, all right? It's actually an area, okay? Not just a line. Area of support and area of resistance is kind of, we should be drawing it like this. If I was to be more technically correct, it would be more like an area would be the highs of the bars at this area down here and the lows of the bar. So this would be your support area, and this would be your kind of your resistance area up in there. So because I'm lazy and I don't want to draw the box, I just draw a line at the tops and bottoms. But to be more technically correct, this is how we should do this. All right, so be mindful of that I take shortcuts sometimes because I'm just lazy. Been doing this a long time. I know what they mean. But those are our areas of support and resistance here on the Dow. I like to trade the Dow. I like to trade the S&P. I'm not as big a fan of trading the NASDAQ. I like the NASDAQ, but the NASDAQ is a big market. And you can see look at how crazy it is. That's impossible to trade right there. Lots of topping tails, lots of bottoming tails. I like to trade the Russell. The Russell is oftentimes does its own thing. Now, these markets will generally trend up and down, up and down, up and down all together, right? They go together, together, together. They like to stay together. Okay, this could be something that we want to look at right here. It's bouncing off of the VWAP. The VWAP is called the volume weighted average price. And those of you who have been here with me a couple of times, and I've got a couple of comments in here from guys. Matt Baker, great to see you, man. I'm looking forward to talking to you. I know you went and signed up for the course material. We got to get together and talk. and set yourself up on the calendar. You may have already done that. I'll have to take a look. Wild Side, good morning. Great to have you. Um, it's good to have some guys in here live. We get nice to have the live guys in here with me, and then we also get some people watching the after party. That's okay too. But if you guys want to help, go down into the YouTube system, and it's got a comment thing down there. You can leave comments on YouTube. Just say hi. Just say something down in those comments, because YouTube doesn't look at this here for the whatever it's called, the algorithm to help us get our word out. They actually just look at the one down below. So if you guys go down and just say hi or great to see you or something down in the comment thing, YouTube looks at that and says, oh, there's engagement. They don't look at this one over here. They don't care much about what we chat in here. So it would help to put some comments down in the lower window. Look at this nice move in the Dow. So if we were paying attention, we could have maybe taken this reversal. But I'm not necessarily into reversals because I'm more into the continuations. All right. I like to see the continuation patterns. So if we're going to come in here, rally 1, 2, 3. So this is kind of what we would look for, right? Want to see a continuation of the uptrend, but everything else is going down. And like I was saying, these markets go in waves and they generally stay together. And if they're not together, this is called divergence between the markets, and that's not really good. We got 3 markets here up in the upper left-hand corner: the S&P, the Dow, and the NASDAQ. They're all large cap stocks, and they have a lot of crossover. There's the same ones are in the S&P that are in the NASDAQ, same ones in the NASDAQ and the Dow, but just different quantities plus different ones. It's just a little bit of a, as our famous vice president likes to say, the Venn diagram. We love the Venn diagram. So it's kind of a Venn diagram of what's inside these 3 markets. The Russell is separate. It's small caps, 2,000 small cap stocks. So it'll oftentimes go in a different direction than the other 3, but it should go all together once things settle down and everything gets cohesive and we get past this first 30 minutes of the day. The market should kind of calm down and everything should travel together. And that's called convergence. All right. Everything should converge and go together. And then you have a leader. One will take off and start to make a nice pattern, and the others will follow. And you usually want to trade the lagger. And the reason I don't like the NASDAQ, I like the NASDAQ. I have a love-hate relationship with the NASDAQ. I like the NASDAQ because once you do get into a position, you make money fast because it's a bigger market. It's a lot bigger than the Dow and the S&P. And so the problem is it works both directions. If you can make a lot of money more quickly, you can also lose a lot of money more quickly. So it's a bigger risk when you get in. So you want to make sure the Dow, the NASDAQ, if it's trading it, you want it to be a perfect setup. You don't want to take, half-ass setups. You want to make sure that if you're going to trade the NASDAQ, you're pretty confident that thing's going to move in your favor. Because even just a stop back can rip your wheels off. Especially if your goal is like, our goal is to make, $500. That would be our goal. So we're going to come in here, just give you a little bit of information. We're trading in the futures market in the Chicago Mercantile Exchange. This is not the New York Stock Exchange. Okay, so this is coming up with a pattern that we're looking for. So see up here in the Dow, I like to watch all 4. Look at how nasty the S&P is. Oh, that's terrible. That's the kind of thing that destroys your account if you're trying to trade during that. That right there, terrible, terrible market. Look at how horrible that is. It's important to be able to recognize a bad market and when not to trade. Okay, this is bad too. And the problem is that we've got the Dow looks good. The Dow's like, oh wow, it's trending very nicely, but the other markets are sucking wind, and so that makes you pause on the Dow. It's like, well, is the Dow going to actually be able to perform if it's weak on all these other markets? Because that's basically a nice little setup right there. That's a flagging pattern, and it looks like the NASDAQ wants to break out to the upside, which is what we would look for over here on the Dow. So what we're going to do is we're going to drop an order in here. That gives us the opportunity to put an order in for a long move, a continuation of this uptrend. So we got 4 bars up. We're looking for a couple of bars down. We want to see this market come down. Don't break the yellow dots. Okay, we don't want it to break the yellow dots. Now look, the stupid NASDAQ's failing on us again. So, but that's what we're looking for right now. We just wanted to pull back a little bit. Don't break the yellow dots. You can stab them. That's okay. Go down, stick your little needle down through them, just like it just did. Okay, but don't close below it. If it closes below it, this is actually to the downside. So now we got to look at it as if we're going down, right? So this is 1, 2, 3, and we look for it to drop out the bottom and come back down and test these low areas. But if it stays above, it just stabs it with this little steely stabber. It's a little needled out the bottom, the little bottoming tail, but it looks like it's going to close. We got 30 seconds left on this bar, and then that'll move our stop in because this is an auto trailing stop. Let me blow this up. See, the problem is I can't watch the other ones when I do this. Let's go full screen on this one, and we'll give you a little bit more so you can see what's going on a little better. Okay, but we're looking for this to take the reversal to the long side. So this is coming down. I don't want it to break below those yellow dots. Those yellow dots are the average true range. And this is an auto trailing stop. Track and trade is not just a charting program. It's a trading platform. There's a big difference between trading platforms. Okay, it just closed, so we got to exit this. We can't. You don't have to. It could still reverse and go up, and we could still take it. It's just not very strong to the upside. It shouldn't have given us that down arrow. That down arrow tells us that this market is going to continue this ABC to the downside and not the ABC to the upside. So let's exit out of there. And so every time you get into the market, you have to realize there's the opportunity that you can go from here to here to here. See, and I was looking for it to continue to rally up. Okay, off of this first rally, this was the pullback. We start to go up again, get a little hesitation, and then look for it to continue back up. And this is giving us that pattern that we just saw in the daily chart. Now it's happening down here on the 1 minute chart. So we're coming into a wedge formation or a triangle pattern. Not my favorite, one of my favorites, but not my favorite. My favorite is that ABC pattern, right? So now we're coming in and we're getting a lower high across here. And we're getting this wedge pattern formation here, all right? So now it's coming back down, and which direction is it going to go? Again, we can project out. This is using Fibonacci as a Fibonacci projection. A, B, C, and is it going to drop out the bottom of this wedge or triangle formation and come down, test this lower region and down into the 100, 130.9. 130.9 is actually our Fibonacci golden ratio to the downside. All right, so we can do the same thing if we're going to go to the upside. And I was taking the longer position, thinking that we might go up to the longer side. So we go up, up, up like that. And now we're looking, here we go. This is where we'd want to be taking a long position right here off of this market. Now we're blind because we're not looking at the other markets to see what they're doing. But if this thing breaks here and starts to rally, we're going to expect it to go up like this. But it could turn, and this could be a failure. So if it gets us long, we would have to reverse and look for the continuation of the downtrend, right? So we're going to look for it to break out the top of the triangle, or it's going to break out the bottom of the triangle, or it could just go sideways. Markets can only do three things. They can go up, they can go down, they go sideways. Where we lose money is when we think they're going to go up and we get in and they go down, or we think they're going to go up and then they go sideways. And they just sit there and whip back and forth. So, okay, so we're long right now, but this is a pullback against this downtrend. Okay, so see this yellow arrow, it's pointing down, saying that we're below the average true range. So I'm going to come in and I'm going to drop in here. And again, this is a trading platform. It's not just a charting platform. So I can have the computer trade for me. And so what I've done is I put a trailing order in there. So that order will now move by itself. The software will move at higher highs and higher lows. See that, how it just moved all by itself? That's the difference between a trading platform and a charting platform. Charting platform, it'll draw charts. You can draw on it. You can put your little stuff on there, but it's not going to trade for you. Okay, so this just reversed our position. So we were going to take long on that first green breakout and go long, right? But it failed. So now we reversed the position, and I'm going short with 2 contracts. So generally, if a buy signal fails, it drops to that. It's just like a good running back in football, right? Good running back in football will fake one way and go the other way. So that's why I use reversal stop sometimes, because we're in a decision point right now. And the decision was, okay, well, let's go long. Oh, faked you out. Now we're going to go short. Now what it's doing, I want the market to decisively go in my favor, and I want it to stay below my entry, which is the bottom of the breakout bar. If it pulls back and takes me and goes back into no man's land, I'm not going to take a big loss. I'll just get out and we'll wait and do it again on the next one. but I want it to stay decisively in my favor, and I want it to stay down there. I don't want it to go back up and stop me out. And I don't want to reverse again right now, because that would just indicate that the market's being stupid and it's just going sideways. So we want to be patient, but we don't want to be so patient that we take a loss. All right. The game of trading is not making money. The game of trading is not losing money. And so where this isn't decisively moving in my favor and it's being weak, I just took it off. I'm like, well, if you're not going to just go on this trigger, why am I sticking here with you, you rotten market? So I just got out. I'm like, I'm not going to take the risk of you turning around and coming back up and losing me money again. See that? Now we'd be losing money right now. So I just got out, killed it, said, I'm not going to take the risk of being in a market that's indecisive. I don't want to trade an indecisive market. Okay. So that's indecision. It faked one direction, it faked the other direction. Now it's going back the other direction. This is whipsaw. This is not trend. So, not going to trade it. We're going to sit and wait for the market to be decisive. And you're like, but then you might miss the run. No, that's proving that the market's going to start to move. Traders are stepping in. We can get a little hesitation, then we can take the next leg. But we want the market to prove to us first that it's going to move. If it doesn't prove to us first that it's going to move, we don't want to get in. We want to get into a market that's moving. We don't want to get into a stagnant market in anticipation of a move. Okay. We don't want to get into a stagnant market in anticipation of a move. Okay. So it faked to the upside, faked to the downside. Now it's went sideways and now it's breaking to the upside again. Okay. So this market is being stupid. So here we go. Now, if we can get 4 bars, 4 rally bars, look at the Russell down here. The Russell looks like it wants to reverse and come back up, maybe back up to the VWAP. We got a hard drop, a harsh drop, 1, 2, 3, 4, 5 bars down on the 1, 2, 3, 4, 5, 6 bars down on the NASDAQ. And now it's giving us a clearing bar and then a rally bar. Okay, so it came down, cleared out came down, bounced off that VWAP. So you could say, I guess, because it come down and touched it over here on the S&P 500 too, and now it's turning around, touched it down here on the Dow, and now it's starting to rally once again. So let's get rid of some of these lines on the screen, and we're breaking above the triangle at this point. Okay, so we're breaking out the top. See how it kind of had a lot of indecision right there, and now it's starting to move out the top. We tried to take some of that breakout initially. We're a little bit early on that one. That's okay. We tried. We didn't take a big loss. Now we're going to wait, and I want to see this market prove to us. Okay, we just got a yellow arrow on the Dow indicating that the market's going bullish. And so that means that we're going to now come in here and wait for it to rally up. I want to see it rally up. See how it's doing nicely on the S&P. We're getting a nice rally on the S&P. I want to see 3 or 4 bars. We're getting into the 3rd bar. I want to see, it'd be nice to see a 4th bar. Now we're breaking above this peak right here. This is that pattern that I just showed you over there on the daily chart, and I pulled it up. Okay, so we've got that. If I back it off just a little bit here, you can see this is that first peak. We come down, we make the second peak, we come back down. Now we're going up, back up, and we're breaking above this previous high. This is a buy signal for a lot of traders. A lot of traders will buy on a break above that previous high in anticipation of the market going up and testing this high. Now what I'm going to do is I'm going to do the same thing. I'm just going to wait though. I'm a little bit more patient. I'm going to see if this market wants to prove to us that it wants to go long. So we're going to go 1, 2, 3, 4. I want to see 4 bars, 4 higher highs. This is a perfect setup so far. We're seeing the same thing on the S&P. We're seeing the same thing on the NASDAQ. We're getting all the turn. Okay, but now look at what the Russell's doing. The Russell started to give us those 4 bars, but it fell hard. I want to see the S&P, the Dow. I want to see this market. I'm going to trade the Dow, but I want to see the Dow. Now I want to see 2 bars back. Okay, so a lot of people buying on a break above this previous high right here. That's a buy signal for a lot of traders. We don't have that pattern over here on the S&P. Kind of, but it's just real ugly. You'd have to say that it would be, maybe right here, and that's where it's bouncing its head right now. But you got another one right in here. You got kind of this little area of resistance right in here. So, okay, we want to see the pullback. This is what we want to see. Now, this isn't a failure. This is just profit takers taking money off of this first rally. So they're going to go up. I want to see it stay below the high. I don't want it to see a fifth bar, 1, 2, 3, 4, 5 bar high. If it does it, it's okay. Just showing strength, and that's what we want to see, strength in the upside. But I want to see it pull back now with a lower high. This is called a flag. It's called the market is now flagging. Okay. The market is flagging. So if I say the market's flagging, that means we got higher lows and lower highs. And it's coming into a little pennant formation. That's what we want to see. It should go into a little sideways. Maybe we'll get a couple of bars back. That's what we want. I want to see 2 bars back. Sometimes you only get 1 bar back, and then it breaks higher again. So now we got a lower high. So I would like to see a second lower high. We got 4 seconds to go. There it is. Boom. We can drop our order in for a long position. Now we're going to take this order. Now, oh, I don't want 3. Let's just go in with 1. We're going to go in cautious today. This being stupid market. So, and the Nasdaq's not rallying for us. It's still dropping, and it closed below the yellow dots. That's not good. So we're bucking the trend. We could do the same thing over here on the S&P. Why don't we just do one on the S&P as well? It's like having 2 contracts, but one on the S&P, one on the Dow, and we're taking this flag. It's flagging, so we get the rally, we get a little hesitation in the trend, and then we're going to look for the next breakout, the A, B, C, D. We're going from C to D. Now, the problem is the Nasdaq broke below the average true range. The yellow dots are the average true range of the market. And the nice thing about using this trailing stop like this is if the market doesn't turn and start to rally and it goes back and fails and starts to fall back down again, well, we don't get in and we don't take a loss. Doing this, placing these orders like this on here with these trailing stops doesn't cost anything. There's no commissions. You don't have to pay anything because we're not in the market. You only have to pay a commission if the order executes. Okay. So there's no commissions at this point. We're looking for the market to continue the green uptrend with a little bit of a pullback. Now it can come back as far as now look on the S&P, it's going to break those yellow dots again. We're not getting any follow through. We're not getting any continuation. We're just getting these little snaky patterns. Little snaky patterns are hard to trade because you look at them in hindsight, and you're like, oh, we would have been rich, rich, rich beyond our wildest dreams. Just trade green, red, green, red. Okay, I'm not telling you how to trade. I'm telling you how I trade. You go do that. I'm not going to do that. I want the continuation. I want to see the market go and continue. Now, this one's failing on us. So the market is not trending. It's just going sideways. And each one of these little 3-4 bar patterns, if they don't break, pull back, and flag and continue, they're really hard to trade. We want the next leg up, and it's not giving it to us. It's going up and failing, going down and failing, going up and failing, going down and failing. It's just lots of failure in here. And we're trading higher highs and higher lows. Look at this. So we're out of the market again. We have to just exit all, get out. We're not in. We missed. The market didn't follow through for us, so there's no trade. So we want to see the market. Let me show you again. We'll come over here and let's look at this one. Let me clear this off. We want to see, let me clear this off too. Let's see, how do we do this? Okay, we want to see, and I want to go to the previous slide. See this? See how we want to see a continuation. So we want to see these trends, but we want to see a crack in the trend like this, where we get a nice move, we get a little pullback, and then a continuation of the trend, one direction or the other. We're not getting that. Right here, all we're getting is we're just getting a snaky pattern, little snaky patterns. And yeah, we could have taken that. We could have said, okay, well, I'm going to take the reversal off of this and we'd be short right now. But I was looking for the market to break higher and go up. And so I wasn't prepared for a reversal. I was prepared for a continuation of the uptrend off of this breaking of that triangle wedge formation, that high, and looking for it to break higher once again. And it failed on us. So that means we weren't prepared to take the short position. We were prepared to take the long position, and the reversal, it took off without us. That's what happens sometimes. I guess we could have traded both the directions and said we could have bracketed the market. And sometimes I'll do that, but I'm being a little bit more conservative here when we're live in front of a whole group of people. Sometimes we'll do bracketing. We'll do that. We'll get a little bit more aggressive and do some brackets, and I'll show you how that works too. Let's watch this market and see if there's not another opportunity. So we're coming back down and testing that area of support. Now the S&P looks like it wants to cascade down. Now remember, our daily chart was very, oh, I'm not showing you the chart. Let's get back on here. Here we go. Sorry. So the S&P, and let's get this going again. Here we go. So the S&P is really having a nice drop. So it's showing bearish again. The Dow is just kind of still showing that it's bouncing off this VWAP again. It's coming back down. It's testing the VWAP. Question is it going to get any follow through to the downside? The NASDAQ, that was a nice drop on the NASDAQ. Makes you feel bad we didn't catch that one, huh? It's like, man, I'm just going to buy every time I get a yellow buy signal and sell every time I get a yellow sell signal. I'll be rich, rich, rich beyond my wildest dreams. Well, do that then. Go do that. See how it works out for you. Maybe it'll work great. I'm not saying it's not. That's a, you can do that. That's a nice way to trade. Trade the average true range is what that is. That's a setting of one. We're using the Heikin-Ashi bars. If I turn that off, you're going to want a different setting for the average true range. But you can see this is without the Heikin-Ashi bars. This is the Heikin-Ashi bars. Okay. So with the Heikin-Ashi bars and the average true range, those are good setups for you. I just like the continuation. I like the trend. I don't like to sit here and trade these little reversals. Of course, it's where those reversals are that where the market starts to trend. But I want a continuation of the trend. That's what I've been looking for, and not the first move of the trend. The first move of the trend is what we call the A1. And I don't like to chase A1s. I like A2s. And both A2s have failed for us today. Every time we've tried to trade an A2, the A2s have failed. So the A1s are working out, but the A2s are failing on some of these. But this is a nasty whole bunch of nasty A1s in there. See how that whole box up there on the S&P? That was really bad. But now the market's starting to clear out, starting to make some trends, starting to move for us. And so we can have some better opportunities here. Let's see what's going to happen. Now we'll probably what I'm going to look for on the Dow is a little bit of a pullback. I want to see the bars come back again. Give us a little pullback. Give us an opportunity to get in, and then we'll take the next leg down. Maybe that's what we see in hindsight. You look back and say, well, that's what that green bars were, Land. That's where that was your opportunity to get into the short side. Well, I thought we would get a little retracement and then another rally up. I thought we'd get something here, 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 and then up. So I was prepared for the market to take off and go up. I wasn't prepared for a complete hard reversal. I oftentimes will trade reversals. You saw me do a reversal there before, but the reversal failed on us too. So we took a long position, then we took a short position. I didn't want to reverse a third time and go to another third long. It would have been better off if we did, but that's all hindsight. You can always look back and say, well, I coulda, woulda, shoulda, and maybe we'll do that again in the future as we do things. We can change and bring things about and do different things. But the markets, at least they're starting to trend now, whereas they were initially in that real nasty time frame. Trading Research, you're back. It's good to see you. Glad to have you. Steve Scott. It's good to see you, Steve. Glad you made it. Okay, we're getting a little bounce here. Now, the question is, okay, we're getting a green bar. What's that green bar telling us? Is that telling us that the market's going to turn around and start to rally, or is it going to just tell us that that's a small pullback in the continuation of the ABC downtrend? So you can come in here and you can say, okay, 1, 2, couple bars back, and then we'll expect for the market to fall once again. So we can come in and put in our order in anticipation of the ABCD. Or if you look at the Russell, you're like, well, I think it's going to be a complete reversal. It's going to come back up and touch the VWAP again. Well, either way. So we can come in here and place an order, trailing stop off of this, see if we can't catch the downtrend. So the downtrend went 1, 2, 3, 4, 5, 6 bars, one pullback. Let's see if it'll continue down. I'm just going in gentle with just one contract. Let's see if we can't get some continuation of the downtrend. That's what I want to see. And I want it to break that previous low, that horizontal blue line off of that ABC pattern. So break that low, and I want to see it decisively move in my favor and go. And if it goes back and I start losing money, then I just get out. We can do the reversal if we want to, but our reversal at this point would be up higher, above that green bar, right? So this market it's being weak. It's being stupid again. It didn't decisively move. So be a little bit patient with it. See it, but it's not going. Just get out. We want it to decisively move. Once we get into the market, it's got to decisively move in our favor. If it doesn't, if it shows weakness, then it's frustrating. We just get out. Now it could turn and go again, and we say, well, you didn't have enough patience. Okay, well, you have more patience then. You sit through drawdowns. I don't like to sit through drawdowns. I want a market to just go in my favor. And if it doesn't go in my favor, just immediately with the trigger and go. Once it triggers and goes, I don't want to get in it. I don't want it to turn around and have to sit through big drawdowns. It's a lot easier to recover once you get a trend that does just go for you when you're right. When you pick it and you put it in there and it goes, then you can recover all your losses, and it's a lot easier if those losses remain small. But to have that thing turn around and go the other way on you. Okay, now to me, it looks like it wants to break that. It wants to break that. So we'll try it again. We're going to say, if you break that, we're going to take a short position here. Okay, we're going to try one more time. See if we can't get a short position out of here. See if this market doesn't want to fall. Now, again, it's got to stay going down. It's got to decisively move in the favor. I don't want to see this thing pull back and start wandering sideways again and being stupid and going, oh, I don't know if I want to fall or not. I'm just kind of tired. Look at the NASDAQ starting to rally. So that's a signal to us that this may not be the thing we want to be doing. If that other market wants to go up and we're short and this one will probably turn and follow the NASDAQ. The Russell's fallen. The S&P looks like it's just being stupid. Come on, Dow. Everything fall. We want everything to fall. Come on. We're short, so we want the market to fall. And it's just being stupid. It's not going. Look at all the indecision bars down there on the NASDAQ. We're down 70 right now. So we could just come in here, since this market's being really stupid and slow, come in here with an OCO, and we'll just put this in here at, just right down there. See if we can't just recover our first 70, just get back to green. That's all we needed to do. We just need to go down to that blue line just to recover our losses. Because the market's, look at the NASDAQ, how stupid it is. Come on, just a little bit more. Oh, look how close it is. There we go. Okay, so we got our money back. We're back to green. And now you can wipe the sweat off your brow. You're back to green. And you're like, you should have stayed in, Lan. It's gonna go fall to the floor and you make $1 million and you got out coming back to green. Don't think like that. That's true. You could have. But now we've recovered. We're back to green. Now we just wait for the next setup. And there's going to be lots of setups, lots of opportunities to trade. You don't have to say, oh, you missed the one true trade. That's the one that was going to make you all the money in the whole world, and you got out early and recovered your losses. I've been doing this a long time. I can tell you, recovering losses is something that most traders will tell you not to do. Don't get out to recover your losses. In my opinion, that's bad advice. When you're a trader and you're emotional, we're human beings, we're emotional individuals. And this is an emotional trading environment. Get yourself back to green, and then you can start fresh again, and you don't have the pressure of trying to recover, of trying to make up losses. Because I can't tell you how many times I got down a little bit trying to get into a trend, and then, you know, 2 3 times, 3 4 times you're trying to catch a trend, and you end up with a loss. You're down a couple $100, and then you catch one finally, and then it goes up and it makes you $200, and you're like, I'm staying in because this is the winner. This is the one that's going to make me rich, rich, rich beyond my wildest dreams, and it's going to go to the moon. And it gave you all your money back, and you could have taken it and been back to green, but you didn't because you wanted more, because you're greedy. And then it turns and goes back down, and it ends up turning a big winner into a loser, and you take something that would have given you all your money back, and now you're have a bigger loss. I can't tell you how many times that's happened to me. I just don't do it anymore. If I can get back to, if I'm starting to get nervous because I'm losing, I've taken 2 or 3 losses in a row, I need a winner, I need one to bring me back to break even, I take it, I do it, and I just wait for another setup, because there's lots more setups. There'd be a lot of more trading opportunities. We don't have to, don't worry about that. Just take the win, be happy with the win. Might be a small win comparison to the overall longer term trend. That's okay. You took the win and you're back to green. Look, we're back to green. We were down. We're back to green. Just take the win. All right. Trust me. You'll be happier in the long run. Don't listen to all those guys that say, don't do that. Don't trade for the win. Don't just take your money back. Don't just trade for the to get your money back, get you out of the hole. Just keep holding on. And in this case, maybe we would have been better off to hold, right? Maybe we would have been better off to hold. But psychologically, I wasn't better off. Psychologically, I was down, especially with you guys watching. I'm still new at having people watch me trade. I generally just sit in my, in my room all by myself in my little office and trade by myself. And I don't have the pressure of having people watch me. I want to do the right thing. I want to perform well for you guys. I want to make sure that we teach good lessons, and I want to make sure that we're not taking big risks, that I'm teaching you how to do it without big risks. So for me, take the win, take the money, get yourself back to green. It'll make you feel a whole lot better. Even if you don't trade again for the rest of the day and you're like, we're done, I'm walking away. At least I'm not down today. At least I got a green day. All right. Might not be a big green day, but at least it's a green day. And you'll hit them. You'll hit them. You'll get to the point where, you'll take your position and it'll go, and you'll have a $500-600 day, $1,000 day. And, it makes up for the days where you walked away with a $15 day. That's okay. Nothing wrong with that. At least you're not down $1,000, down $2,000, trying to hold on to positions, trying to wait, trying to make more, trying to be greedy. Just play it close to your chest. Be careful. These markets can rip your wheels off faster than they can give you the money. All right. Leave me a comment down in the comment section. I really appreciate it if you just go down there and say, hi, Lan, I'm a trader. I like to trade. This is great. Come and join you. It's a lot of fun. I'm enjoying it. Give me a comment down in the comment section so that YouTube knows that you guys are here. They don't know you're here if you come in and comment in this window. They only know if you're down in the other window. All right, let's come in here. Let's talk a little bit about I gotta throw something out here to you. Where's my, let's see. I want to show you Pit News Magazine. Come and join me over at Pit News Magazine. All right, Pit News Magazine. Let me turn this banner off here. Let me get my picture out. but I just stick videos out there, like everybody else. I'm just starting to do this new live stuff, and it's been a lot of fun. I've enjoyed coming and hanging out with you guys. And hey, John Mackey, glad you could make it. It's good to see you here. Uh-oh, are we having problems? Matt, can you hear me? You say the audio went out? Are you not able to hear me? I think, oh, you know what? I wonder if when I remove this, if the audio goes out when I remove my picture. Oh, you know what? I'm sorry. So like I say, I'm sorry, Matt. Um, I'm just new at this YouTube live stuff, and I think what happened is okay, look, oh, I got to get an order in here. Got to get an order in. We'll take this next. This is drive one, drive two. We'll see if drive three will follow through for us on the short side of this downtrend. If not, we may reverse it just because we've been talking about reversing. So that's the downtrend, the little 2 bar back, the market flagged. I think if I turn my picture off down in the left hand corner, my audio goes out. So here I am going in and talking all about all these pictures that I bring up, and my audio goes out because I remove my picture, because if I remove my picture, you can see the picture better that I'm showing on the screen and get myself out of the way. But then the audio goes out. So I apologize. I was sitting there giving you guys lectures about all the stuff I'm showing you on those charts and the graphs and all that stuff over there on the other channel or on the other screen, and my audio was gone. I'm just learning, so I won't do that. I won't make that mistake again. Yeah, Matt, sorry about that. Glad you pointed that out. Oh, look, we're getting a failure. It's failing. I'm getting out. We could have reversed, but I didn't. We'll use the other reversal tool. So if that thing breaks higher, we'll take a reversal. I should have reversed with 2. We can add one more in. Okay. I'm going to add an OCO. We're going to right click on the tool. We're going to go add OCO. OCO is one cancels other. We're going to set our goal out here. At this point, we're running pretty close to the VWAP. I'm just going to set that limit if it comes up and tests the VWAP. See, okay, now right now we're down $55 because I was screwing around with the audio and wasn't paying much attention. But this market, see that? It went up. We're down $55. It's up making $55 right now. If I wanted to just take that off and it's not quite there now. It's gone past it. That would be a prudent move just to bring me back to green once again. But where it's only $55, I might hold it a little bit and see if we can't get a better rally out of it. The Nasdaq is moving. The Nasdaq and the Russell are rallying, and so is the S&P. The Dow's being the lagger and the slow one. It should follow and should rally up with the rest, but it's not. And that's showing weakness in the Dow, and of course that's the one we picked. We picked the weak one. The other markets are doing really well, and the Dow is the one we picked is the one that's showing weakness. Come on, buddy. Follow along. Whip it. Come on. Spur it. Spank it. Whatever you need to do to go. Go, go, go. Come on. Quit being stupid. So we're going to bring our stop up, and if it stops us out, we're just going to get out with a small loss here. This one's being stupid. And I'm going to give it an order, instructions. I'm going to tell it to trail, price bars back, and I'm going to go 1.1. So I'm just going to put my trailing stop in there. And again, this being a trading platform and not just charting platform, the software is now going to trade for me. It's going to move my stops. It's going to look at this stupid market. The Nasdaq is doing so well. So is the Russell. The Dow now needs to follow. Come on, Dow. Come on. Come on. Look at this. This is really frustrating. We just got stopped out with a loss. When all the other markets are taking off, the Dow wants to be stupid. Now wants to try and break and go higher again. The other markets are still going. We're going to try again. I'm just going to go in with a single though because it's being stupid. Look at the NASDAQ go. The Dow should follow. Come on, Dow. What is wrong with you? The Dow is being really stupid. We should have been trading the S&P or the NASDAQ or the Russell, any of the ones other than the Dow. Come on, Dow. What's wrong with you? All the rest are going. Come on, come on, come on. Kick it up, kick it up. Oh my gosh. This is terrible. I can't believe this. Ugh. What kind of bad luck is that? This continues. I'm going to kick the Dow out of the first position and put S&P in first position. Dow, you're disappointing me. Come on, come on. Oh my gosh. It's going to stop us out. It's going to fail. Oh my gosh. Can you believe that? Look how wimpy that trend was on the Dow, how strong it was on the NASDAQ and the S&P and the Russell, and the Dow is dying on us. What in the heck is going on? Come on, Dow. Well, it makes you feel like we should have been trading the NASDAQ for sure. Don't fail on me now. Come on. Oh my gosh. All right, guys. That was a frustrating few moments. Brought us back down, $200 down. What a lousy situation. Well, I'll come back at 9 o'clock, wait for the market to settle down a little bit, do some of this stupid stuff, see if it's not going to make some trades for us. But I'm going to let you go. It's been an hour, been here for the first hour, and I'm going to go away red. I'll get it back before the end of the day, though. Wait and see. I'll go find another situation, another strategy. Look right here. The NASDAQ is starting to give us another. You want to try it right now before we take off? The NASDAQ wants to go. I missed it, though. It's already broke. The Russell's wanting to go, too. It flagged right there, and that's a nice little buy. But it's up at the top right here. It's getting a little extended. I want to see a little bit bigger pullback. Well, lots and lots of trading opportunities. We'll try it again. I'm going to let you guys go for the day. It's been 1 hour, and couldn't make it happen for you today. $200 down. But the day's young. We still got a lot of hours to go. Wait for the top of the hours. Top of the hours has a tendency to reset the market, and the market will start to trend again, start to trade. Do that for the first couple of hours, and then we'll be off to the races once again. All we have to do is just recover and then continue. Okay? Recover and continue. Recover and continue. Good thing we didn't take that long. Look, it's getting ready to fail there on the NASDAQ. It's being slow and weak. What's it going to do? What's it going to do? We could take the reversal. We could be trailing up with a trailing stop. Oh, I was going to show you my settings before I take off and leave you guys. Let me show you my settings. This is the one I'm using. I'm using QOCO3 all the time. And this is how I have it set. And the reason I don't have any OCO, I have the stop and the limit set to zeros on this one. Oh, there it goes. It's starting to move. Oh, now the Dow goes. Now the Dow decides it wants to move a little bit. Of course, now that we're out, you rotten bugger. So you can see my settings. So this is the settings in track and trade. I'm using a trailing stop for entry. And so I use a trailing stop for entry and reversal with no stop and no limit. Once my market decides that it wants to go in my favor, unlike the Dow today, then I can reverse the position, or I can add on my QOCOs by doing what you saw me do before, which is right click on it and add the OCOs. So there's a number of different ways you can handle this. I'm using this one right now, just having it auto trail for me, just on a stop with no stop and limit. But the QOCO 1s and 2s are just buy markets with the same thing. And then the QOCO 4 is a trailing stop As you can see, I'll show you that one. That one's on the ATR in case we want to use the dots. So for example, I could come in here and say I want to trail on the NASDAQ dots, and it'll automatically start to trail on those yellow dots and reverse on the dots. All right. So that's how that's set up. You can set up yours the same, and we'll go through that again tomorrow. You guys want to meet me here tomorrow, and we'll continue doing this again. Again, I'm going to let you go for now. I'm going to go take a break, come back, and we'll at least get our 200 back and see if we can't scratch out the day and maybe scratch out a little bit of a profit. But I'm going to let you go, and we'll catch you next time.